How you doing, friends? It is Thursday, February 2nd, and a wild ride today. A wild ride. I don't know how else to characterize it, but today we're going to talk about the performance that we have in our service. Now, let me just be clear. This is my performance. It's not the quote services performance, but this is the reference account that I use to help everybody, to train people. And so I use it as a demonstration, but it's real money. I trade in a Thinkorswim account, and I also trade in a Fidelity account. The starting capital was $23,000 when I started this 225 days ago. Now, I did something similar to this the first 9 months of the service. The service right now is about 20 months old. And then I started this account up about, I think it was the beginning of June in 2022. And I wanted to start it up to show people how to properly track these trades and then how to use that information to get the type of statistics that we need to make sure that we're on track with our strategy. Now, as I said, this is not an alert service. So be very clear about that. This is not an alert service. I used to have an alerts channel, but I found that people were relying on that instead of actually learning the strategy, the framework, and the methodology, the continuous improvement process, all the things that this service is designed to help people become consistently profitable. And so I took that alert channel out of there because people were becoming dependent upon it. And there were a few people that were a little lost when that happened, but they soon came around. Because if I can get everybody to work at the strategy, work at the process, it's really everything is about the process, then they'll become more knowledgeable, more independent sooner. And that's really the goal, to make everybody an independent, consistently profitable, professional trader. Now, what we do here is that we trade a particular type of strategy. The strategy isn't as important as the philosophy behind it and the methodology. The philosophy is that we want to put as many edges together so that we can, let me turn this off here. Put edges together so that we have something that we can rely on and that we can implement the underlying philosophy. And that is asymmetric returns, taking very small risk for very large outsized gains. And of course, the other thing that we do is we want to collect premium. Now, there's a reason why we want to collect premium, because from what I know, there's only two types of traders, two types of strategies where people make money. It's either collecting premium or a pure arbitrage. Now, we're not going to do a pure arbitrage. That's really left for market makers, high-frequency traders, arbitrageurs of various services, or maybe statistical arbitrage in the futures market. So that's not what we're doing. Instead, what we do is we collect premium. And perhaps the most opportune way to collect premium that I know of is to do it on the 0 DTE, or the last day of expiration of options on the SPX, the widest traded index in the world. That's what we do. And fortunately, when I first started it, they had these weekly options that went 3 days a week, Monday, Wednesday, and Friday. And then as of last May, they turned it into a 5-day thing. So now you can trade these weekly options and do a 0 DTE every single day of the week. And not only on options with the SPX, but also options with its companion, the futures product, the E-mini S&P futures, the ES, and also the XPS or XSP, the XSP, which is 1/10 the size. It's the micro version of the SPX. So they all trade 5 days a week. Now, there's also the NDX that trades 5 days a week. The RUT might also, but both of those are not very good trading asset types because their liquidity is super low, the volume is super low, and the volatility is off the hook for the NASDAQ. So it really doesn't work well in this situation. The SPX, the E-mini S&P, and the XSP are right on. So what we do is we collect premium in the very final hours of expiration. So that's one of our edges. The other edge is taking on asymmetric risk to reward. And the reason why that is an edge is because there are a number of reasons. But some of the bigger ones is that, first of all, it has a long-term positive expectancy. It helps you stabilize your returns and particularly your drawdowns. Your drawdowns are very small. It also provides an intangible edge, and that edge is that because your drawdowns are small and because the volatility of your returns is under control, you very rarely lose it. You're not panicking. You're not putting on these huge risks to make tiny little profits like most people do with high probability strategies. This is the way pros trade, right? I don't know what else to say beyond that. We trade the way a typical pro would trade. The high probability strategy and that methodology, that's basically how a retail trader would trade, a day trader. And we all know that 98% of all day traders are losers. So why would we want to do what losers do? We don't. We do what winners do. All right. So that's why we trade what we trade, and we're trading it with the most popular index and collecting premium. The other way to make money besides arbitrage is also collecting premium. You go to any investment house or investment bank, and they have market makers on there, high frequency traders, statistical arbitrageurs, and they're doing all of that arbitrage. And then on the other hand, you have the discretionary end of the house, and those people are typically trading asymmetric trades and selling premium. And their strategy of choice for most people that I know of is the butterfly. And so that's what we do. We trade the butterfly. Now, how do we get an asymmetric trade on with the butterfly? We do it by putting it out of the money. We don't trade it like you probably heard of, that it is not I guess you could call it a market neutral strategy if you wanted to trade it that way, but it's a horrible market neutral strategy because you have horrible risk to reward if you put it on at the center strikes, put the center strikes at the money. It's just, same thing with the iron condor. It's the horrible market neutral strategy. So anyways, whoever heard of a market that was neutral? It's hardly ever neutral. So why would you do all your trades and wrap your strategy around every condition as if it were neutral when it hardly ever is? It's a rhetorical question because you wouldn't. So we don't. The market moves. Now, we don't know how much it's going to move. We have no idea. So what we do is we take our butterflies, and we put them out of the money, and we put them far enough so that it gives us a substantial asymmetric return. In other words, we make our risk very small by pushing it way out and look for a debit. Typically, we put on a long fly. Look for a debit that is at least 1/10 of the width of that fly. And you might think, that's crazy. I know, but that's how they do it. That's how pros do it. That's how we do it. And we make money consistently that way. Now, you're probably thinking, okay, so the win rate's going to be pretty small, or it's not going to be what I want. I want 85, 90% win rate because that makes me feel good. Great. What's it doing for your capital, your bank account? You're losing. The win rate has nothing to do with it. Everything is about the returns. Everything. And by having small risk and huge potential returns, you have a much better chance at getting returns that actually are meaningful. You also have a much better chance at having small drawdowns because you're not putting a lot at risk, which means another thing that will give you another edge, and that is you can have skin in the game and you stay in the game. You're not going to get shooken off. Someone who trades asymmetrically isn't going to go on tilt. It's possible that they could, but then they're doing something wrong. Now, the other edge that we have, and this is the biggest one, this is the absolute biggest edge, and that is the process that we use. We use a continuous improvement process, and that is designed, I'm hoping that everyone hears me, by the way, because so many times that I've done this and they say, "Hey, Ernie, we can't hear you." Let's see. Where's the sound bars, sound levels? There it is. Yep, I see it. All right, cool. Thanks, Max and Jahan. Thank you very much. All right. And so what we do is we institute a continuous improvement process. Now, what does that mean? We do a continuous improvement process that is patterned after agile methodologies. That means that we break down our trading into small little mini projects. You can think of each day as a mini project. Each day that you trade, we record everything that we do in that day in a way that allows us to then aggregate that data for a retrospective that we do at the end of each week. And by aggregating that data and then analyzing it, we can see patterns of behavior, either good or bad, that we can fix. Every day we have a very definitive process. Every week we have an enveloping process. Every month we have another bigger process. So it's fractal in nature. And each process has a loop, it loops back, where we look at what we're doing. If we're getting off track, we identify what the problem is, come up with a solution, implement the solution, get back on track. And we do that continuously. It's just a continuous improvement loop. That's how you become consistently profitable and a professional trader. It's a never-ending process. It's not something that you do haphazardly or every once in a while. You ingrain this process in everything that you do. You do this, you trade that way, and I guarantee you will be 1,000% more profitable than you are now, which is pretty easy considering that most of you are negative. And so if you go 1,000 times more than that, that's not saying much, but let's just say that you'll be consistently profitable and you'll be happier. Now, there's another component that helps you along with that, because putting a process on like that is great if you have the discipline and the mental fortitude and the desire to do something like that, and the ability to be able to, I guess, look at yourself, look at what you're doing, and then be able to introspect your thoughts. Then you can make that process work. But most people can't do that. Most people don't know when they're getting off track or when they're going on tilt, or if they're doing the wrong thing. So they need a coach and a mentor to help them stay accountable. And that's what I do. I help guide you, coach you, mentor you, help you stay accountable to the goals that you've set and the process that you've committed to. That's how you become a professional, consistently profitable trader. All right? Good. Now that we get that straightened away, that's exactly what we do in this service. If you're interested in doing something like that, then go down below, click on the try link there, the 0-dte.com/try for a trial. And we have over 1,000 members. Our trade room is buzzing every day with hundreds and hundreds of messages. The people are very supportive. Everyone's excited. People are making money. You would love to be part of this room. And I've put a lot of effort into making sure that this room is that way, and it's really top-notch. There's lots of great resources for you. Everything that you need is there, including the coaching. Right? So when you become a yearly member, you get free coaching lessons. That's part of the membership. And you won't find a better value than that anywhere. Why would you want to learn from me? I'm not going to go too much into my background, but let's just say that I've got 40 years in the industry, 30 years in finance as a hedge fund manager, institutional trader, currently a CIO of a 9-figure fund. I've been there, been around the track. I've done just about everything. I've coached dozens and dozens of traders. And in fact, my prior life, I actually coached C-level folk in Fortune 5s to Fortune 100s. So I've got a tremendous amount of experience. I know how to get peak performance out of people. And that's what you would get when you join here. For really, what is a pittance? It's amazing. The price is going to go up, by the way. I can tell you that. We've got a nice stable of people, but if you want to get in on what we have right now, price will never be lower than it is right now. All right. If you like all that, if you think that that's worthwhile, then give this video a thumbs up. And if you're not subscribed already, subscribe. And now we'll get into what we're here for, and that's to look at our trades and our performance, or my performance. And this is sort of emblematic of what other people could do. And I'm not saying I'm the best trader in the room either. In fact, I'm probably the most distracted trader. I often have to do or interrupt my trading and do live streams, support people, interview people. I interview everybody that comes into the service. It's like having a full-time job while trading, but this is what I've been doing while there. And today, now, as I said, we trade the butterfly, but we trade a particular style of butterfly in this type of market, and it's something we call the Batman. And I guess you could call it kind of a market neutral trade, but it really isn't. It's a bi-directional trade is a better way to put it. We put one above the market, one below the market, and then we manage the one that is profitable. The other one, we don't manage so much. We do have some risk management, but because our risk is so small, we're generally left without having to manage that risk. Instead, we're managing our profits. It's a complete, like I said, inversion of risk. We don't manage our risk or we don't manage losing. We manage winning. All right, so today we put on two trades. I put on two trades. I put one on last night because the volatility after Jay Powell's speech was still elevated. And so putting on a Batman last night with the E-mini S&P futures made a lot of sense because that allowed us to get in, or allowed me to get into a good trade. Many people followed me as well. And this morning I put on an SPX fly. Once the market had already started moving, I didn't have to put on both sides of the market with the SPX. I only put it on one side, on the bull side. So typically we put on on the bull side, we put on a call fly, and on the bear side, we put on a put fly. And we have a method of managing that profit by creating a kind of framework that we develop, and then that makes it very easy for us to compartmentalize all the different possible scenarios that could go on in the trading day. We grade ourselves. We continually improve that process, as I said before. All right. Now, to get on to, if you ever want to see my performance, which is, like I said, emblematic of what the service is doing, you can go to my website, 0-dte.com, and then click the Trade Log tab. All right. I'll show that right now. Let me bring that up. I didn't have it prepared, so just give me a second here. All right. There we go. All right. And I'll also show you my actual trade log as well. But this is easy just to show you the basic stats of the trading. You can see that I had some good days these past couple of days. Now, the most significant thing that I said before, the asymmetry that gives us the ability to keep everything under control, small drawdowns. Over this period, which is 226 days, my max drawdown has been 3.25%. 3.25%. This is the drawdown right here, and that actually happened right here. That was my biggest drawdown right there. Now, there are other places where I came close to that, but now 3.25% is, I'm sure that's like a foreign stat to you. Not that a drawdown is a foreign stat, but that amount of drawdown is probably something foreign to you. Most people are happy with a 20% drawdown, and most loser traders are looking at 100% or 50% or 75% drawdowns, not 3%. Professional traders would give their left nut for a 10% drawdown, a max drawdown of 10%. This is 1/3 of that, all right? Now, will it stay that way? It's probably going to stay within that range, somewhere between 3 and 5%. I don't think it will ever really get too much above that, just the methodology that I use. The other thing you'll notice is that it's like a stair-stepper equity curve. You go up with some really positive trades, go sideways, go up, go a little sideways, go up, go sideways, go up, go sideways, go up, go sideways. And that's the way it goes. Generally, what happens is that we get a lot of fat tail winners, big wins, big chunky medium-sized wins, and then a lot of tiny little losses and tiny little wins. So the tiny little losses and tiny little wins are the sideways. Then you get these big wins where you just take off. And that kind of pattern leads to, now this is only almost 200 trades. That's a lot of trades. But when this gets to be 500 trades, this is going to look like a straight line. Now, of course, there's some volatility in there, but that's what you have. But it's minimal, absolutely minimal. So small drawdown. Now, here's the crazy part. The percent profitable or win rate, only 49%. However, in that period of time, in that 225 days, or about 2/3 of a year, a little less than 2/3 of a year, I've returned 41% on the starting capital. Started with 23,000, now up to 32,500 approximately. 40%. At this rate, I should do probably around, I'd say, I don't know, 60%, maybe 65%. A 65% return. Now, here's the crazy part. With that $23,000 account, I never traded more than, say, let's see what the average amount of risk that I'm putting on. $145. That's the average. So when I'm putting a trade on, I'm not risking more than $145. That's 0.5% of the trading capital. 0.5%. Let that sink in. In my trades, now where most people are putting on 5, 10, 20% of their trading capital, a lot of you put on 50% to try to make a tiny little profit. Then when that day comes when everything is due and you lose that 20, 30, 40, 50%, you're sitting there with your head in your hands, weeping, saying, what did I do? That never happens here, ever. It can't. It could. You could be dumb and overtrade, but we don't have to. This is the most efficient way to make money. Trading. I'm sure that there are other efficient ways to make money, but this is, from a trading point of view, this is the most efficient way that you can use your capital to make a return. And it's the least obtrusive. It's the easiest to manage. Now, I'm not saying that it's easy. You have to learn how to take profits. You absolutely. And it's a continuous process. You're continually getting better. How long will it take you before you're absolutely continuously profitable? How long do you think it will take? Is it going to take 2 weeks, 2 months, 2 years? 2 years is probably closer for most people, because how do you know you're consistently profitable unless you can do it 2 years in a row? Now, if you can do it month after month after month, you still don't know if it was that market type. Maybe you were just in a market that was serving it up for you. You won't know until you apply your strategy in multiple different types of markets. And the only way you're going to get there is through consistency. And the way you're going to achieve consistency is through a framework and a process. And then also to have somebody over you, a coach, a mentor, to keep you accountable. That's how you get that kind of equity curve. Let's see, other stats that we have here. This is a real telling one. The average winner to average loser. The average winner is almost twice that of the average loser. Twice. Look at this, largest winner, almost $1,500. We have a lot of big winners. Now, what we're going after is a certain type of distribution that's called skewed right with a long tail. And actually now we're working on making that long tail a fat tail. So here's a skewed right distribution. Lots of tiny little losses, tiny little wins, then a lot of big medium-sized wins, and then a lot of huge outsized wins. That's how you grow an account. Now here's the average risk to reward. You can see that it's right now it's right around 8. But if you actually look at the overall average, my overall average risk to reward is 9.2. Okay. So there you go. Total return, 41%, $9,500 in that period of time. Now, it's possible in a year I could double it. I don't know. I think that it's more likely I'll be up around 70, 75%. Now, can I do 70, 75% every yearly period? I don't know. I traded in two very distinctly different periods with this strategy. One was we traded prior to this in 2021. It was a bull market all the way. Then 2022 came around and it was a bear market. Now, 2021, I had similar performance. I actually did even better in that accommodative market that the Fed was just pumping money in there and the market was going straight up. I actually tripled an account in about 9 months with this strategy. Then the bear market came and it became much more difficult. Back then, we were just trading one fly directionally. In this market, that's very difficult. So we take on a bi-directional strategy now that makes it easier to make profits in this hectic market. So there you go. There's the strategy, returns, the return distribution, the risk to reward frequency, and all the data. So if you wanted to take a look at all the trades. The last couple of trades were pretty good. Let's see. Can we will this go all the way to the end? I don't know. Let's see. Go 100, right? All right. The last few trades, let's see, these are today's trades. $514 winner and a $346 winner. These all include the commissions and fees. So there's no farting around here. We're not trying to pull anything over your eyes, not giving you false results. This is net result. Had a loser here, had a big winner here yesterday. Almost $1,200. A string of losers, big string of losers, a couple of winners, etc. So that's the way it goes. Some other big winners back here. Small winners, small losers. So you can look at that. All right. I don't know if anybody has any questions on that. If you'd like to ask a question, do so in the chat. Be happy to answer it. The market today was really volatile. We got in, like I said, very early, got in actually yesterday and then early on in the day and put everything on as a kind of a directional, not a directional, but we put on a Batman where you put on above and below. The call side ended up being the choice fly that we had to manage. And then once we moved enough away from the bearish side, we took the put fly off. Where do I trade options? I use Thinkorswim and Fidelity. So I have two accounts that I use. Most people are using Thinkorswim or Interactive Broker or Tastyworks or similar platforms. All right. So that's it. I said I was going to show you my actual trade log. Let's see if I can bring it up here. So this is the actual trade log, and you can see here's where I got the charts and graphs. And average winner to average loser, the win rate right up there. What's my net profit? This over here in the upper left-hand corner are all the different types of things that we could trade. Now, I haven't traded the NQ or the micro E-mini, but I have traded the XSP. I haven't traded the SPY either. There's no reason to trade the SPY. The XSP, the ES, and the SPX are the ones that I've traded. And then these are the cost of trading those for a round trip on the butterfly. So we record our entry, the cost basis right here, in the B column. And then when we exit it, how much did we exit for? Hopefully it's more. You can see a lot of my trades went to 100% loss. See that? Look at this, a bunch of them in a row. And that's because the loss is so small that it's pretty much inconsequential. So we don't even bother managing it. Sometimes we let something go and then it comes back. So that's another good reason not to close a trade. So we let it fester, and then you get this market reversal, and what looked like a loser comes back and becomes a big winner. Is trading every day a good idea? If you have a strategy that works, absolutely. And if you can handle every kind of market, absolutely. And we trade both. We trade options on the index, the SPX index, and the XSP, and also options on futures. So it's both options and futures, but we're trading options because we're collecting premium. And again, this is not an alert service. This is a service where you come to learn how to become consistently profitable and to become a professional trader. If that's what you would like, if you would like to be consistently profitable, I don't know anybody that wouldn't want to be consistently profitable and to learn a strategy that comes directly from the trading floor of pros. All right. I'm telling you, this methodology is what the pros use. If you want to learn this and trade that way and learn how to trade that way and become conditioned to trade that way, then join. All right. I think that's about all I have to say. Let's see, is there anything else worthwhile? I can show you the live chart and the stats that I keep. Let's see, what else is there? Yesterday's trade, the trade with the E-mini, I took it right about here last night at about 8:45, which would be right there. Entered the trade right here, put a fly above, put one below, and the one above hit. When the market opened this morning, right around here, right here, I added another SPX trade and put it even further out of the money, and that made money as well. Didn't go all the way inside of the profit tent of that one, but it doesn't have to in order to make money. All right, I have one more question here. What do you think about funded account? How much do you need to start, I think is the question. And I would recommend that you start super small. You can start with something as little as $1,000, $1,500, and learn the process, learn the trade with something like the XSP, which is a micro index. And that way, at least you have some money in the game, skin in the game, as they say. But you're not going to get hurt. The risk that you'll be taking is going to be super small, but you'll learn the strategy. Once you can become consistently profitable, or once you can consistently not lose money, then graduate to the SPX. Trade a little bit bigger, make your account a little bit bigger, and then go from there. All right. That's about it. Thank you very much for the questions. Really appreciated it. And again, if you would like to join this service, go down below, click the link, 0-dte.com/try. It's a 4-week trial. After the 4 weeks, it's a paid trial, by the way. But after that 4 weeks, if you join the service, I'll rebate the cost of the trial. That's about it. Thank you very much. Peace to you all. The market still has 21 minutes to go, but I think we're done with it today. Take care. Time for the music.